please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. It's a good time to run you through what's going on in today's trading session. I'm Nigel D'Souza and with me is Surbi. Hey Surbi, good day.
Good day, Nigel. I don't know if people who were hoping to start a long trade, I don't think they're having a good day for sure because we're really struggling out there. I don't know if the only caveat, if you want to say that, is that we're not alone. This is obviously once again a little global in nature. But days low on the street. Absolutely, yes, Surbi. I think, the trade wars, the uncertainty, that's what's really playing out. And everyone would have liked a longer weekend. But I'm sure the bulls, they would have loved a long weekend because today, they just come out there and every kind of pullback is being sold into. So we're virtually at the low point of the day. You shorted this market at any point of time from the morning till now. You'd be making money, struggling to hold on to the 10,350. Watch out for the 2018 low. That comes in at around 10,276. That's the important mark that the bulls will try to say. Okay, so the headlines tell you the story on the street. It is a weak day and watch out for mid-caps because that's where the pain is a little more exaggerated than what we're seeing on the Nifty and the Sensex. Actually, the Nifty Bank is not that bad. It fell to a fresh 2018 low in the morning. Since then, it's off that level. It's the mid-cap universe where you're seeing plenty of selling out there. Well, it's time to move on to our Movers and Shakers segment. We've got a couple of stocks lined up for you. Let us start with the index pharma major, Aurobindo Pharma. Ekta is joining in. Ekta, so what is the street's reading of these 9 observations on Unit 4?
Well, I'll take you through the news on Aurobindo Pharmaceuticals. Now, over the past long weekend, the observations or the Form 483, which was issued to the Unit 4, was basically accessed by us. Now, remember that this particular Unit 4 is an injectable facility and it had received 9 observations from the USFDA in the inspection which had taken place in Feb of this year. To put it into context, the last inspection, the company had received 7 observations for this particular facility. It was inspected in April 2017, and post that they have seen some amount of recalls which have been initiated by the company from this plant as well. So the context of these 9 observations in any case become a bit precarious. Now, if you look at the observations themselves, most of the analysts are of the opinion that no, there is no data integrity, there is no OOS or out of specification observations, but still they are procedural or largely procedural in nature. However, I have had some conversations with some industry experts and they are of the view that yes, while there might not be, say, data integrity issues that you're talking about, a kind of response that Aurobindo would have to make on these particular 9 observations becomes critical in terms of the way forward for Aurobindo and what would happen to this particular unit. Having said that, it is expected that at least for some time there could probably be a delay in terms of approvals from this particular facility, if not an escalation. Now, that is, remember, the opinion of a certain number of people. It again depends on how exactly Aurobindo would respond to these 9 observations. Like you mentioned, the likes of Credit Suisse are quite confident on this and they've upgraded the stock to outperform from neutral because they do expect that these observations were better than what was anticipated.
Okay, all right. Thanks so much for that, Ekta. Well, let's go across to Sonia. She's joining in to tell us what's going on with Tata Motors. Sonia, over to you.
Well, thanks a lot for that, Nigel. It's a double whammy, as you guys were stating earlier. On one hand, the North America Jaguar Land Rover sales have been quite disappointing. Overall sales have fallen 2.5% on a year-on-year basis this time versus a 1% fall that we saw last month. So the cuts are getting deeper there. And not just that, the legacy products are doing quite badly. That's the reason Jaguar has seen a big fall of almost about 37% or so. Land Rover as well has not done too well. Apart from that, the Trump tweet that there could be taxes imposed on cars coming in from Europe, that really has impacted luxury car makers across the world. Remember, the top 4 luxury car makers in US are the ones that are manufactured in Germany. So you saw Daimler, Audi, all the stocks fall across the world and the world markets, and you also saw the Jaguar Land Rover the Tata Motors stock fall because JLR will be impacted. Now, JLR has 100% of its production in UK, and if this tax comes through, then of course demand will be hit. So it's a double whammy of sort. I spoke to a lot of analysts. They say that it's too early to sort of, come to a conclusion about the Trump tweet. But then, in general, Jaguar Land Rover has been weak, not just in the North American market, but now there are signs of slowdown in the Chinese market as well. So that's a bit of a concern for them. Back to you.
Okay, all right, Sonia, thank you very much for that. And speaking of those tweets and all this talk of tariff wars, auto and Tata Motors not the only part of the market that's taking a hit. All of metals is down. Take any metal stock, throw a dart, you'll find it on the bottom side of the screen today. So, Nigel, you've been, of course, listening to the commentary, talking to a lot of people. Is there a real threat right now? This is maybe some sort of panic that's playing out?
Well, uncertainty is always a threat, right? You don't know what's going to happen next, and that's really the big problem. Today, the United States is saying that we are putting a tariff. Tomorrow, what if someone else puts? That's the big problem there. And in 2002, 2003, well, I was not around, but, I was reading a lot of reports, and at that point of time, the S&P 500 fell by 25 to around 30% as well. So it's clearly not a very, very good sign. I'll just put the numbers first into perspective. What happens in terms of, the proposed tariffs? 25% on steel, 10% on aluminum. That's what's proposed. In terms of US market, they import 35 million tons, they export 10 million tons. So the net importers to the tune of around 25 million tons. From where do they import maximum of the steel? From Canada, as well as the European Union. Now, that's important. But from our point of view, South Korea as well as China is important, because of South Korea and China together, they export nearly around 4.5 million tons to United States. If they can't do that, then they'll dump it in other parts of the country, in other parts of the globe, and maybe India as well could come in for that. In terms of implications, it's not very, very large, because US represents only around 5% of India's exports. Remember, India's export run rate has been going up in the last 1 year or so. And in terms of export mix, well, JSW Steel, they have nearly around 25% of their mix that is exported, not to the United States, but on the whole. So those numbers as well comes up for you on the screen. HSBC is saying, well, this is not a big impact, because India accounts for only 2% of the entire steel exports to the United States. They're saying that the impact can be very, very minimal. But rerouting of these exports, as I said, if they find their way into other markets, that's what could put pressure on steel prices. And every 1% correction in steel prices could impact the EBITDA by that statistic that comes up for you on the screen. That's the FY19 EBITDA that we're talking about, 1% correction there. Macquarie, they say that they're not too concerned with regard to these tariffs. They believe, in fact, there will be no big negative in terms of prices as well. Moving to the aluminium market then, aluminium market, the US was importing roughly around 5.5 million tons. Their capacity is only around 1.5 million tons approximately. But the problem is the US aluminium production, there the capacity utilization has fallen to around 40%. And Canada, that's the one over there that accounts for bulk of this. Hindalco is a stock that's down nearly around 4.5 to around 5%. Why is that? Jefferies has given us some numbers. The United States, they account for nearly around 39% of Novelis' EBITDA. But importantly, close to around 35% of its raw material is sourced from Canada. Jefferies in their note is saying that maybe in fact Canada will not come under this entire tariff. Now that's something that we'll have to see. But in terms of exports, the Indian operations, nearly around 50% of what they produce, they exports. So that's not very, very good sign. So from the India point of view, the problem is if LME prices fall, then it gets hit directly. From Novelis' point of view, if the premium goes up, then that's not bad news at all, because, the LME price fall is the pass-through. So I think the street is, more cautious on what's going to happen to the Indian operations if, in fact, LME aluminum prices fall. But today, uncertainty really is plaguing all these stocks. You have NMDC that's down 6% as well. That produces iron ore. So that's telling you what's happening in terms of the entire metal basket.
Yeah, it's basically a no-go zone, at least for now. Watch out for a couple of those counters in terms of the level of exposure, as Nigel explained. JSW Steel, as far as steel goes, and obviously Hindalco is one stock that could be taking a hit as well. We're focusing on two more stocks now. A pretty interesting story brewing here. Take a look at what's happening to Thomas Cook. That stock is surging in such a weak market, about 6% on the higher side. And Quess Corp, its subsidiary, is actually down almost 7%. There is business restructuring that's happening at Thomas Cook. So to understand exactly what's going on and why there's divergence, we have both Nimesh and Mangalam now joining in. Thanks so much, guys, for being with us. Nimesh, let me first start with you. So the understanding is that the management wants to give shareholders of Thomas Cook more direct access to Quess Corp.
Correct.
What kind of restructuring is this, and what numbers are we looking at?
Okay, so Surbhi, this is an official announcement which came over the weekend from Thomas Cook, suggesting that they're looking to distribute the shareholding of Quess Corp directly to the shareholders of Thomas Cook. Now, what this means is, one, this will unlock the value for Thomas Cook shareholders. For a long time, Thomas Cook was enjoying the holding company discount because of the fact that they were holding 50% of Quess Corp. Now, just look at the math of all the three companies. Thomas Cook current market cap, 9,600 crores. Quess Corp's current market cap is 13,700 crores. So if you look at 49% stake of Thomas Cook in Quess Corp, that's valued at close to 6,700 odd crore rupees. Now, if you remove Quess Corp from this whole structure, then the Thomas Cook is valued at currently close to 2,800 crore rupees. Now, what will Thomas Cook hold after removing Quess Corp from these businesses? One, they will be holding the travel and forex business. And second will be the Sterling Holiday Resort. Now, just to give a history to this whole Thomas Cook story, Fairfax, which is owned by Prem Vatsa, they bought this company way back in 2012. At that point in time, Fairfax paid close to 1,000 crores for the travel and forex business. And on top of it, they added Kyoni for 700 crore rupees. So 1,700 crore was put by Fairfax in the travel and forex business. And for the Sterling Holidays, they bought this Sterling Holiday Resort for 900 crore rupees. There was a debt as well. So the enterprise value was 700 crores, but the fair value was 900 crore rupees. Now, both these businesses are struggling for the last few years. There is a slight indication of turnaround in Sterling Holidays. Now, if you add these two businesses, at what price Fairfax bought, this is where currently the price is indicating to. I was reading at an IFL note today morning, and they are suggesting that if you exclude the Quess Corp holding in Thomas Cook, if you remove that holding company discount, the fair value for Thomas Cook could be 280 rupees. But if there is a good turnaround which is expected over the next couple of years in both the travel business and the Sterling Holiday Resort business, then the fair value, or also for that the bull case scenario for them is close to 330 to 360 rupees per share for Thomas Cook. But clearly, this is a first indication that they're looking to value unlock in Thomas Cook, remove the holding structure discount, and henceforth Thomas Cook will be seen only as a travel business, with the fact that they're holding Sterling Holiday Resort as well. So that's the key structure which has been discussed. I think Mangalam will tell you as to why Quess Corp is under pressure and it should not be under pressure. Mangalam?
Well, it seems like Quess Corp falling about 7% is primarily on account of the street fearing that there could be a higher supply of Quess Corp shares in the market, and which is why we're seeing that 7% cut. But that doesn't look like the case to be, because the news is basically Thomas Cook will distribute the shares that it has in Quess to all the other shareholders. And as Nimesh said already, Thomas Cook holds 49% shares in Quess Corp. What does this mean? Well, so Thomas Cook basically currently has about 7.1 crores of Quess Corp on its books. The total number of shares of Thomas Cook are close to around 36.7 crores. That's the table. So the 7.1 crore shares that it holds in Quess Corp will be distributed to the 36.7 crore shares that there are of Thomas Cook. Rough back of the envelope calculations, as well as a confirmation coming in from Quess Corp itself, indicates that basically the swap ratio will be the shareholders of Thomas Cook will receive 1 share of Quess Corp for every 5 shares that they hold in the company. Basically, it's just multiplication of the numbers, dividing 36.7 crore shares by 7.13 crore shares. So what does that mean? In terms of gross market value, 5 shares of Thomas Cook at current market price at about 1,283, 1 Quess Corp share at about 941. So that arbitrage should fix if there has to be a function of no arbitrage pricing out there. The second thing will be the change in Quess Corp shareholding pattern. Fairfax, which is owned by Prem Vatsa, currently holds 67.6% in Thomas Cook, and these shares of Thomas Cook, 49% that Thomas Cook holds in Quess Corp, will be distributed to Fairbridge Capital. So Fairbridge Capital now directly hold 33.1% stake in Quess Corp rather than holding it via Thomas Cook. So what happens to this shareholding pattern? Well, that table should come up for you. Thomas Cook currently holds 49% stake in Quess Corp. Fairbridge Capital holds nothing. The other shareholders are Ajit Isaac and Net Resources. So together, the promoters hold about 71.6% stake in Quess Corp. Once this redistribution happens, Thomas Cook will own nothing. Fairbridge Capital will hold about 33.1% stake. The shareholding of Ajit Isaac and Net Resources remains the same. So the promoters' stakeholding comes down from 71.6% to 55.7%. Nothing really happens. It's just an optical change in the promoter shareholding. That means the free float increases, and that is something that we need to keep an eye out on. Two things. One is the arbitrage in prices, and second, the optical change in shareholding pattern. So no real supply really coming out Quest Corp.
So just to add last point to this, I spoke to some of the large investors of Thomas Cook, and essentially what this means is finally now they are looking at a structure which which removes the discount, holding company discount on Thomas Cook, gives them a plain vanilla play of playing for the travel business and the sterling holiday business. Simple as that. So that's the key reason why they're doing this exercise of removing Quest Corp from the original holding of Thomas Cook.
Yeah, but those businesses have to start performing as IIFL expects them to for the price to move up to 300 plus, as is their expectation. Okay, thank you so much, Nimesh and Mangalam, for explaining that to us. Quick recap of the top buzzers of the hour. We're, of course, looking at Aurobindo Pharma and the fallout of the 483 observations there. Tata Motors on the downside today. Thomas Cook, Quest Corp, as you just heard. Hindalco, Tata Steel and SAIL all hurting, smarting from the Trump tweets on higher tariffs. The big story this morning, the US is likely to impose import curbs on steel and aluminium. We caught up with Ken Pang, Asia-Pacific investment strategist at Citi Private Bank, to understand the implications. He says the two big risks to consider are whether the Trump tariff plans actually extend beyond steel and aluminium. Take a look.
We'll have to see whether this goes beyond steel and aluminum, because just at the current stage, steel and aluminum accounts for such a small share of global trade, particularly with China, that if it stops here, it wouldn't matter that much. However, what I do see as a major risk is how Trump goes, how the U.S. administration goes ahead with the investigation over intellectual property, which could apply to a much wider set of products, and also how the U.S. administration is going to improve its ties with Taiwan, which kind of becomes a bit of a deal breaker for China. China, and to some extent emerging markets overall, are less sensitive to these type of things because they've built up bigger domestic demands. They've built up bigger, more resilience in terms of innovation and all that good stuff. So I think the net, had this happened say 3 years ago, it will scare me a bit more than where we are now. But the way this is done across the board on steel and aluminum, it seems to be angering too many people. See how the pushback is from Canada and the EU, as much as from China.
Okay, all right. Let's take the discussion forward then. We have with us Ritesh Shah, senior analyst of Investec, who joins us on the phone line. Hi, Ritesh. Thanks so much for joining in. Pleasure talking to you as always. Well, I was just looking at your note, and you have a buy rating on both Tata Steel as well as JSW Steel. So today's dip should be a buying opportunity?
Yes, Nigel. And the note, what we have indicated is like 40% of US and NAFTA imports actually originate from Asia. So this is likely to have some repercussion on the steel pricing, because this volumes will look for desperate shores as you need to sell end of the day. However, there are balancing variables which are there for steel, which we believe retain our structural theme on the steel sector. One is, if you look at China supply side reforms over the last 2 years, the net exports have actually come down by nearly 35 million tons. And this is a significantly higher number as compared to 12.5 million tons of imports, so what we are looking from Asia into US. And secondly, if you look at US steel production, it is predominantly electric arc furnace based. And as production increases over there, the scrap prices will also move up. So there could be some cost curve support, which also essentially means that the blast furnace steel mills will do better than electric arc furnace. And hence, both Tata Steel and JSW are well placed.
Okay. Ritesh, since you do have an optimistic view on both of these stocks, any indication of what we can expect on pricing? I mean, as and when this tariff order is actually implemented, any indication of what we might see in terms of prices internationally?
Right. So what we are looking at a volume displacement of 12.5 million ton, right? So that accounts for nearly 4% of global seaborne trade. This is extra regional imports. So there will be definitely an impact. However, to quantify it, it is a tough one, because it's a function of currencies as well as the cost curve of the steel mills. Specifically to India, if you look at, you have trade measures already in place specifically for HRC, which is at $478 to $489. And if you look at the prevailing steel prices, they're upwards of $620. So is there some room of correction because of this incremental volumes chasing new shores? The answer is definitely yes. But one will have to wait and watch exactly how the market reacts. Not to forget, you also have other domestic variables. Once you have likes of SR, Bush and Power actually come to supply, you'll also see some incremental supply also into the market. So there are balancing global variables, specifically from the China structural story. So our structural theme remains positive, and we expect ferrous spreads to actually expand here on.
That's an interesting thought, Ritesh, actually, but plenty of unknowns. So, we'll have to wait to get clarity on that, and only then, in fact, you can go ahead with that bold call on the ferrous space. But let's talk about the non-ferrous space then, Ritesh. What's the view on Hindalco? That's taken a sharp knock. It appeared the street was sensing something like this. What kind of impact could it be? Are you more worried about the falling LME prices, and what kind of impact that could have to the domestic business, or are you more worried about Novelis?
So it's twofold. Actually, if you look at the recent pricing, so one is LME prices, and secondly, it's physical market premiums. Now, physical market premiums, specifically Midwest, has spiked up more than 50% since Jan, which could be probably an indication of what the traders were expecting out of Section 232. However, contrary to this, the Japanese port premiums haven't moved much. Now, what it essentially means for Novelis is that input cost will move up for sure. Now, if they are able to pass through it, it won't be a problem. But if they aren't, definitely their spreads will be there will be some pressure on the spreads. Also, there will be some time lag, and there might be metal price lag also, which could actually adversely impact the cash flows. Now, if you go to the recommendations, so there is a specific mention over there wherein Wilbur Ross has indicated that there could be import relief for downstream industries. So this is something which categorically needs to be watched for. So specifically on Novelis, if you look at headline numbers, if they're not able to pass through the cost increase, it would imply depressed spreads. However, one will have to look for finer items before drawing any conclusion.
I just want to go back on the steel bit, Ritesh. You did mention that because of these issues, there could be some, at least near-term softness in prices, including, of course, prices here in India, though we already have a lot of those anti-dumping measures in place for HRC. How much of a, price softness are you penciling in? Is that not a concern? Because you're still positive on JSW as well as Tata Steel.
Yeah, we are positive. So over here, we don't look at only the steel prices. We look at the spreads. So that's why I indicated we are positive on the spreads. Because our global house call is we are negative on iron ore prices. So we expect the steel prices to remain flattish to marginal downward trend, and iron ore and coking coal prices to actually go down at a faster rate. And hence, you'll see expansion in spreads. Again, to answer your question, you have trade measures which are at $478 to $489 on HR coils. And the global steel prices are currently at a significantly higher level. So they are actually ineffective at this juncture. So it definitely leaves room for Chinese cargo prices to come down. And it will definitely have a bearing on local prices as well, because you don't have that protectionist trade measures which are effective at this juncture.
All right, Ritesh, very quickly, NMDC, you were saying that you're not very bullish on iron ore prices. Any view on NMDC? Now, I was speaking to a global strategist, metal strategist, just last week, was talking about very high iron ore at some of the Chinese ports, and that's what could put pressure on iron ore prices going ahead. Any view on NMDC?
So we have a sell rating on NMDC, and the recent price hikes or the spike that you have seen in the stock, it was predominantly on back of the local mining issues in Orissa. And most of the mines, including the larger ones like of Sirajuddin, they have restarted production. So the local supply is definitely moving up. And if you look at it top down, we are actually negative on iron ore pricing, factoring. One is what you indicated is port inventory at China, and secondly, incremental supply which is hitting the seaborne market. So overall, both top down as well as bottom up, our view on NMDC is negative, specifically on pricing. And as far as volume offtake is concerned, as these new mines get auctioned locally or as likes of Sirajuddin come into picture, NMDC will find it difficult to push its existing volumes as well. So it's a double whammy situation for NMDC.
Okay. All right, Ritesh. Thank you for your time. Thanks for joining in with that quick analysis of what these higher US tariffs might mean for metals, including, of course, Indian metal stocks.